Okay, let's unpack this. Bitcoin. Currently sitting around, what, $103,929 and change as of today, May 11th, 2025.
Yeah, quite a number.
It is. We saw a tiny dip, barely noticeable in the last day, but look back a week, up almost 7%.
And the month.
The last month is, well, pretty staggering, a 35% jump. So what on earth is driving all this movement?
Well, that's really the core mission of this deep dive, isn't it? To, really dig into the key factors that seem to be pushing Bitcoin's price around lately.
Right.
We're basically looking at a focused summary, thinking about the big economic picture, the smaller market stuff, and even some potential global shifts on the horizon.
And just so everyone's clear, this is us exploring the possibilities.
Yeah.
We're connecting dots based on observations, not giving financial advice.
Absolutely. Speculative analysis, grounded in current data and projections. We'll be hitting the main points. Global economics, policy shifts, inflation always a factor, the recent halvings effects, market mood, sentiment.
And the big institutions getting involved.
Yeah.
Exactly.
Institutional adoption. And of course, we'll touch on potential speed bumps or challenges too.
Okay, sounds good. Let's kick things off with those macro factors, the big global economic stuff. What should we be paying attention to there?
Well, one really interesting thing is how the Federal Reserve's interest rate cuts throughout 2024 seem to have pumped more liquidity into the system.
More cash sloshing around?
Kind of. Think of it like this. Lower borrowing costs mean businesses, individuals, they often have more cash available, and some of that inevitably looks for higher returns, which can lead it towards assets, well, like Bitcoin. Riskier assets become a bit more tempting.
Makes sense. Lower rates make safe stuff less appealing.
Precisely. Bonds, things like that, less attractive.
Right.
So investors might eye assets with more, let's say, upside potential. Plus, you've got a weaker US dollar recently and low real yields.
That's the return after inflation, right? Yeah. When those are low, just holding dollars isn't great.
Right.
People look for alternatives to protect their buying power. And Bitcoin, with its whole inflation hedge narrative, starts looking pretty good, especially maybe in emerging markets where local currencies might be struggling even more.
Okay, so that paints a picture of upward pressure. But are there clouds on the horizon? Economic worry?
Oh, definitely. The sort of persistent whispers about a potential recession could easily spook the markets. If the global economy really starts to slow down, uncertainty shoots up.
And investors run from risk.
Often, yes. They might pull back from anything seen as risky, and that could include Bitcoin. In that kind of scenario, you could imagine the price pulling back maybe into that, say, $80,000 to $82,000 range we've seen discussed.
So it's like a tug of war. More money pushing up, but economic fears pulling down. Where do you think the balance is right now?
Well, if the global liquidity stays high, if the money keeps flowing, there's a genuine chance Bitcoin could push towards, maybe even test its old high. What was it, around $109,588 back in January? It really hinges on whether that flow of capital into the market continues strongly.
All right, let's switch gears a bit. Geopolitics and policy. How are governments potentially playing into this?
Well, the U.S. election outcome from last November, Donald Trump's re-election, is something the crypto market is definitely still digesting and watching. There is a general sort of expectation, or maybe hope in some circles, that his administration might be more, let's say, crypto-friendly, maybe lighter regulations in the U.S. That usually boosts confidence.
And I've heard some chatter, pretty speculative maybe, about the U.S. setting up a strategic Bitcoin reserve. That sounds like it would be massive.
Oh, it could be huge, game-changing potentially. Even just the idea of the U.S. government holding Bitcoin strategically could create enormous demand pressure. Some analysts are throwing out numbers like $150,000, maybe even $200,000 by mid-2025 if something like that actually happened.
Wow, that's a serious jump. But surely there are policy risks too, regulatory uncertainty elsewhere.
Absolutely. That's the counterweight. While the U.S. might seem to be heading towards a friendlier stance, the global picture is, well, still very patchy. If other big economies get nervous or bring in stricter rules, that could definitely put a lid on how high prices can realistically go.
Okay. And inflation. It feels like we're always talking about inflation. How's Bitcoin fitting into that conversation now?
It really seems like persistent inflation worries are just reinforcing that digital gold narrative for Bitcoin.
Because of the fixed supply.
Exactly. Its scarcity is key. Only 21 million coins ever. We're already at, 19.86 million mined. That fixed supply makes it look like a potential safe haven when traditional money might be losing value.
And it looks like some big players, institutions are buying into that idea.
They certainly seem to be.
Yeah.
Institutional investors are increasingly looking at Bitcoin as a legitimate asset class for diversification. You look at companies like MicroStrategy.
Yeah, they've gone all in.
Well, maybe not all in, but they've made significant Bitcoin holdings part of their treasury strategy. They're a major example. If more institutions follow, even allocating a small slice of their portfolios, some projections see that potentially pushing prices into the $130,000 to $180,000 range by the end of this year.
Okay, let's zoom in a bit now. Micro factors. The halving that happened back in April 2024, what's the impact we're seeing?
So the halving, it cut the block reward for miners in half. Fewer new Bitcoin being created every day. That tightens the supply.
And history suggests
History suggests these halvings are often followed by significant bull runs, reduced supply hitting the market while demand potentially stays the same or grows.
right, less new supply.
And if you look at the on-chain data, the blockchain itself, we're seeing signs that support this. Fewer Bitcoins seem to be flowing into exchanges where they might be sold, and more seem to be moving into cold storage, offline wallets.
Suggesting long-term holding, accumulation.
Exactly. It looks like long-term holders are stacking sats, as they say. That reduces immediate sell pressure, supports a more bullish outlook. Some analyses, looking at these historical post-halving cycles, even spit out figures like $149,014 by late 2025.
That is remarkably specific. Okay, what about just the general market mood, sentiment, and what are the charts telling us, the technical?
Well, breaking above $100,000 was a big psychological barrier, huge milestone.
Definitely felt like one.
And that move seemed to get a lot of support from inflows into those new spot Bitcoin ETFs we mentioned. Plus, technically, there was this pattern called a cup and handle forming, which chartists often interpret as a pretty strong bullish signal, suggests the uptrend might continue.
So the technical indicators are looking positive overall.
Generally, yeah. Another one, the RSI, the Relative Strength Index, it's around 67. That shows strong buying momentum, but it's not yet in that extreme overbought territory, suggests there might still be room to run. And you've also got key support levels. The 200-day moving average, for example, is around $94,200 right now. That often acts as a kind of floor the price might bounce off if it dips.
But markets rarely go straight up, right? Any signs of a potential pullback based on sentiment? Profit taking?
Oh, absolutely. After a run like we've seen, 35% in a month, some people are going to want to lock in profits. It's only natural. That could definitely trigger a short-term correction. You might see the price dip back toward that, say, $88,000 to $94,000 zone as people cash out.
Okay, let's touch on Bitcoin's dominance. How much of the overall crypto market cap it holds? Seems quite high.
It is currently around 64.5%. That's actually the highest it's been since 2021.
Wow. What does that tell us?
It strongly suggests that capital is flowing out of other cryptos, the altcoins, and into Bitcoin. The likely reason. Bitcoin's perceived stability, its longer track record compared to many, many newer coins.
So in the sometimes wild world of crypto, Bitcoin is seen as the relatively safer port in the storm right now.
That seems to be the prevailing sentiment, yes. And that trend might well continue unless, some altcoins come up with truly compelling new narratives or applications that really grab significant investor attention on their own merits.
Okay, let's zoom back out again to the sort of world agenda. Institutional adoption, you mentioned the ETFs. How big a deal has that been?
It's been a genuine game changer. The approval of spot Bitcoin ETFs in the US really opened the floodgates for large institutions, pension funds, asset managers to get Bitcoin exposure easily within regulated frameworks.
And that's fueling some pretty bullish predictions.
It is. You see firms like VanEck putting out forecasts suggesting Bitcoin could peak around $180,000 sometime in 2025, largely driven by this institutional wave.
What else could push it towards those really high numbers, like $200?
Well, continued strong inflows into those ETFs are key. Plus, if more corporations start following MicroStrategy's lead and put Bitcoin on their balance sheets, even small corporate treasury allocations, collectively, could add significant buying pressure.
But potential bumps remain.
For sure. You always have the risk of maybe regulatory pushback we haven't foreseen, or just large-scale profit-taking by these big players if the market gets ahead of itself. That could easily lead to those mid-year corrections we talked about.
Right. And speaking of challenges, what about the persistent criticisms, the environmental impact, for instance?
Yeah, the energy consumption of Bitcoin's proof-of-work mining is still a major sticking point for many. A big concern. That could definitely act as a drag on adoption, particularly among ESG-focused investors or in regions really prioritizing green policies.
And how might broader global regulations impact things?
Well, if we see a trend towards stricter regulations globally, outside of perhaps the US, that could definitely dampen retail investor enthusiasm. Retail has always been a big part of Bitcoin's runs. So unless more major economies adopt explicitly pro-crypto policies, that regulatory uncertainty could act as a ceiling, maybe keeping prices capped nearer that, say, $130,000 level.
Okay, last area here. Technology and market developments within the Bitcoin ecosystem itself. Anything interesting happening?
Yeah, this is crucial for the long term. You're seeing continued development on layer 2 solutions. The Lightning Network is the best known example.
Making transactions faster and cheaper.
Exactly. Trying to improve Bitcoin's scalability and usability for everyday payments. If these layer 2s really gain traction and widespread use, it massively increases Bitcoin's utility beyond just being digital gold. That could attract a whole new wave of users and support long-term price growth.
But internal market risks exist too, beyond just price volatility.
Competition is fierce. There are thousands of other blockchain projects trying to innovate and offer different features. That's constant pressure. Yeah. And you can't ignore the whale factor.
Big holders.
Right. Estimates vary, but something like the top 2% of Bitcoin addresses hold maybe 92% of all the Bitcoin. When these large holders move significant amounts, it can and does create major waves in volatility in the market, independent of broader trends sometimes.
Okay, phew. We've covered a lot of ground. Macro, micro, policy, tech. Based on all that, let's try to sketch out some possible scenarios for the price. What's the optimistic, bullish case look like?
Okay, bullish case. If everything aligns just right, continued strong liquidity globally, massive institutional inflows via ETFs keep rolling, and we get that more supportive regulatory environment, maybe even hints of that strategic reserve, then you could realistically see a strong rally, pushing towards that $150,000, maybe even $200,000 range by, say, Q3 2025. And in the near term, retesting that $109,000 high seems very plausible under those conditions.
And the flip side, the more cautious, bearish outlook, what could really knock the price down?
Bearish case. A significant global recession really takes hold. That would likely trigger a broad flight from risk assets. Combine that with perhaps unexpected regulatory crackdowns in major markets, or just a huge wave of profit-taking from early institutional investors, especially if traditional stock markets are also tanking. Then you could see a pretty deep correction, pushing Bitcoin back down into that $80,000 to $88,000 zone.
Okay. And finally, what feels like a sort of middle ground scenario. The base case, perhaps.
The base case probably looks something like this. Bitcoin maybe consolidates for a bit, chopping around in the, say, $100,000 to $120,000 range through the next quarter or so. Lots of volatility reacting to macro news headlines.
Right.
But then, as the year progresses, the underlying support from the halving supply squeeze and those steady, even if not spectacular, ETF inflows continues to build. That could lead to a more gradual climb, maybe reaching the $130,000 to $150,000 range by the end of 2025.
All right. So that's our deep dive into the speculative factors swirling around Bitcoin's price based on the summary we've walked through.
Yeah, quite a mix.
Definitely. We've hit the big economic forces, policy angles, the halving effects, that growing institutional interest, and also some potential headwinds. It's really clear there are just so many powerful, sometimes conflicting forces at play here.
It's complex, no doubt about it.
So thinking about all these different elements we've discussed, here's a question for you listening. What single factor do you think will ultimately have the biggest impact on where Bitcoin's price heads in the coming months? Definitely some food for thought there.